Today, we're going to jump in and talk about one of my favorite strategies to implement into your portfolio. This strategy is going to allow you to benefit if a stock moves in any direction. That's right. It does not matter where the stock goes. If it goes up or it goes down, you make a lot of money. So stick around because I'm going to show you guys how this strategy works and how to implement it into your portfolio to make ridiculous money that is going to make you guys very happy. Hey guys, Corey here. Welcome to the channel. Appreciate you guys being here. If you could subscribe and tap the bell, this way you don't miss great content like this, and give me a thumbs up as it greatly helps the channel grow. Before we jump into this awesome strategy, I just want to let you guys know that I launched my full masterclass boot camp, which only has 10 available spots, and now I only have 4 left. So if you guys are interested in joining my masterclass boot camp with me as your one-on-one coach, as well as full training course and Discord access, you guys can do so at any time with the link in the information box below or my website on the screen, investwithcorey.com/learn. If you guys are struggling in the market to make profits and you just want to better your financial freedom and wealth, I would love to help you, as I am totally dedicated and driven to help you become successful. So I cannot wait to talk with you and become your coach. And just as an example of what to expect in my Discord and my training course, Rivian jumped 75% the other day. I called that in my Discord several days ahead. So if you had been a part of the Discord, you could have made 75% in 4 hours. I just want to point out that I'm not a financial advisor, and this is not financial advice. I'm just here to give you guys strategies, tips, fundamentals, technicals, and financials on different companies in the market. However, it's ultimately up to you to decide which stocks to put your money into and how much of a position size in that stock or options or strategies, as it's your money. I am about to blow your mind with this strategy. It is the exact opposite of the butterfly strategy that I showed you guys previously, which I will put right there for you. In the previous video, a butterfly strategy benefits when a stock moves into a very narrow range. However, it has to move into a very small range in order to make profit. Great strategy, very cheap, high return. However, this strategy is even more powerful because this strategy doesn't matter if the stock goes parabolic in a bullish direction or a bearish. All it has to do is move. That's it. All the stock has to do is move up or down. It doesn't matter where it goes. As long as it goes somewhere, you make money. This strategy is so powerful, and I've made so much money implementing it around earnings time that I just have to share it with you guys. It is such an awesome strategy to implement into your portfolio. And I'm going to show you guys exactly what to do, so stick around because I'm going to show you how to set it up and which stocks it works best on. So let's get started. So this is how the strategy works. I'm going to show you guys, if you were to buy a straddle, you'd buy the same call and the same put at 187.50 on Tesla as an example. This is a straddle. However, the issue with the straddle is you don't know where the price is going to go. It's equal. If it goes up 10 or down $10, doesn't matter. You make equal profit. However, with a strangle, you cap your loss. You see the loss here is $5.92. The difference is a strangle, you would not buy the $187 call and put simultaneously. Either the call or the put would be offset. So in this situation, I'm going to raise the call to 190. Now you see it's no longer $592 loss. It's $484, $106 less of a loss. Now, the difference between a straddle and a strangle really is that a straddle is equal. You don't know where the price is going to go. It's basically the exact opposite of a butterfly. It can go up 10 bucks or down 10 bucks and you profit the same. However, if you feel like there's a slight bias in the stock, like maybe it might go up a little or maybe it might go down a little, you run a strangle. This is a better situation for a strangle because it's a little bit more biased in a direction. Let me show you what I'm talking about. So with a strangle, the price of the stock would have to go to $193.42 to break even with more downside. With a straddle, we raise the call to 190. It has to go to $194, which is a higher price, but there's $106 less risk. Well, if we feel like the stock is going to go up, this is good because it's costing us less money and the stock is going to go up. We feel bullish. However, if we want the price to not have to go up as much, we would basically just buy the $187 call. And then instead of buying the $187 put, we would buy the $185 put. So again, it's $106 less risk. However, instead of having to go to $194.86 or even $193.60, we only have to go to $192.36. This is what makes a strangle so powerful. A strangle gives you a better hedged position than a straddle. So now the stock only has to go up to 192 instead of 194. $2.50 less of a move and $106 less risk. This is what makes a strangle so powerful. This means that if Tesla goes up, it only has to go from 187.19 to 192. If it moves $5, now you're making a profit. So right before earnings, if Tesla was to go up $10, you would make $500. You would double your money. If Tesla was to go to $200, which it's done many times, it's moved $13 or more, you would make about $700. So at this point, you would double your money. This would be like a 2x or a 3x return if the stock moved $15 to $18. So now what if we feel like we're bearish on Tesla? We think it's going to go down to like 180 or 175. We're not really bullish on this. We think earnings are going to be bad. Well, first thing what we're going to do is we are going to go to the call and move it up from 187 to 190. We're going to go back to the put, and instead of 185, we're going to raise it to 187. You see what we just did there? Now the stock only has to go to 182.66 instead of the way we had it before, where it would have to go to 180.14. You see? That's a bullish scenario. But by raising the call to 190 and raising the put to 187, we've shifted it to 182.66. Let's say we're not as bullish and we're even more bearish, but we're not sure it'll go to 182. We want a little bit better results. We would raise the put to 190 and then we would raise the call to 192. That means it only has to go to 184. Do you see how powerful this is? And all the while, if we did this and Tesla still was bullish and went to 198 or 193 or 196, we'd only lose a little bit of money, $200 or 150 instead of 557. Or if it moved a little extra in the bullish direction, we were completely wrong, we would make money still. So it's like the benefit of a straddle, but we're hedging, less risk and less movement required as we can shift it in whatever direction we want. However, this isn't the ultimate play because we're not sure if Tesla would go to 196. So really it would be best to buy a 190 call and it would be best to have a 187 put. This way it would still have to go to 182, but instead of having to go to 198 in the opposite direction to make profit, it only has to go to 194. If we were bearish, this is the best scenario because we're already leaning into the bearish scenario. We only have to move about $5 to start making profit. However, in the bullish direction, we have to move about $7 or $8. So in a bearish scenario, this would be the way to go. In a bullish situation, we would do the 185 put and the 187 call. And this would give us a little bit of bias in the bullish direction. You can see how powerful this strategy is. It's cap versus a straddle on the loss. Instead of being neutral like a straddle, a strangle gives us the hedged position to have a slight bias, bullish or bearish, but also giving us tremendous profit on either side while capping our losses on the hedge side of things and by reducing the cost by around 20%. A strangle is very powerful and my favorite strategy to make maximum profits from a tremendous move. If we were to have used a strangle in a bearish situation on Roblox, you can see here, this would have been an $8 drop. This would have been a 4 or a 5x return, probably a little bit more. A $500 position would have turned into $3,000 or $4,000 quite easily on Roblox. Another example, Rivian. If we would have opened a strangle in a bullish situation on Rivian right before close today, this would have been a 10x return. Probably closer to a 10 or 12x return. Yeah, this would have been good. $500 position would have been around $4,000 here. This would have been insane. The key to remember on this, fam, when you're executing this trade is to make sure that you have the bullish or bearish kind of sentiment on the stock where you think it's going to go, the bias of the strangle, and you have to make sure it's on a stock that's got a big catalyst or earnings or is making big moves, not a stock that's consolidating left to right, because that's for an iron condor and that's for a different video. I'm going to have that video coming out real soon, but that is a different strategy. This works best when a stock is going absolutely nuts, parabolic in every direction, or it could go in either direction, but either way, it's not sitting still or consolidating left to right. This strategy can print stupid profits as long as you execute it at the right time on the right stock. Thanks so much, guys, for being here. Really appreciate it. Be sure to subscribe and tap the bell so you don't miss any content like this. And if you guys are interested in my one-on-one coaching and want to become a part of my Discord coaching and full training course, you guys can sign up at any time in the information box below or investwithcorey.com right there on the screen. I hope to see you guys over there. I just launched my exclusive masterclass boot camp. Only 4 spots remain in this masterclass. So if you guys are interested, you guys can also sign sign up on my website as well. I'm hoping I get the opportunity to speak with you guys and help you grow your wealth. But don't worry, guys. I know this video is over. I picked another video just for you, and it's right here. This video is everything you ever wanted to know on covered calls. So click it. I'll see you guys over there. It's the last covered call video you're ever going to have to watch. Remember, let's grow our wealth together. Take care, guys.